Welcome to this lesson on real assets during inflation, focusing on real estate and commodities. When inflation erodes the purchasing power of money, certain investments can help preserve and even grow wealth. Today, we'll explore how tangible, physical assets like real estate and commodities have historically served as effective shields against inflation, protecting investors when currency loses its value. Real assets are physical, tangible investments that have intrinsic value. Unlike stocks or bonds, which are paper assets, real assets are things you can touch and see. They maintain purchasing power during inflation because they have inherent utility and demand. The main categories include real estate, such as residential and commercial properties; commodities, including precious metals like gold and silver; agricultural land, which produces food and resources; and energy resources like oil and natural gas. These assets don't just represent value on paper, they provide real-world utility that people need regardless of economic conditions. Real assets offer 4 key mechanisms for inflation protection. First, they possess intrinsic value. Their physical utility remains constant regardless of currency fluctuations. A building still provides shelter, and gold still has its properties, no matter what happens to the dollar. Second, their prices typically appreciate alongside inflation measures, often keeping pace with or exceeding the rate of currency devaluation. Third, many real assets generate income that adjusts with inflation. For example, rental rates on properties tend to increase as living costs rise. Fourth, supply constraints play a crucial role. You cannot simply print more land or instantly produce more commodities, which supports value preservation when demand remains steady or grows. Real estate provides multiple layers of protection against inflation. Property values historically track or exceed inflation rates over the long term. As construction costs, land prices, and demand increase, real estate values typically rise in tandem. Rental income growth is another powerful mechanism. As tenants face higher living costs, landlords can adjust lease rates upward, maintaining or increasing real returns. There's also a significant advantage for property owners with fixed-rate mortgages. As inflation causes currency to lose value, the real burden of debt decreases. You're repaying loans with money that's worth less than when you borrowed it, while your property appreciates. Finally, real estate is a tangible asset with inherent utility. People always need places to live and work, creating consistent demand. Investors can access real estate through several vehicles. Residential properties include single-family homes and apartment buildings, offering steady rental income and appreciation potential. Commercial real estate encompasses office buildings and retail spaces, typically with longer lease terms and higher income potential. Industrial properties like warehouses and manufacturing facilities have gained popularity with the growth of e-commerce and logistics. Real estate investment trusts, or REITs, allow investors to own shares in professionally managed real estate portfolios without directly buying property. Land investments, whether undeveloped or agricultural, offer pure appreciation potential and can be developed later. Finally, hospitality properties like hotels and vacation rentals can provide higher returns but come with more operational complexity and market sensitivity. Commodities are raw materials and natural resources that form the building blocks of our economy. They fall into 4 main categories. Precious metals include gold, silver, platinum, and palladium, traditionally viewed as stores of value and inflation hedges. Energy commodities encompass oil, natural gas, and coal, which power transportation, heating, and electricity generation. Agricultural commodities include wheat, corn, soybeans, and livestock, essential for feeding populations worldwide. Industrial metals like copper, aluminum, and steel are critical for construction, manufacturing, and infrastructure. Because these materials are fundamental inputs for virtually all economic activity, their prices tend to rise when inflation increases production costs throughout the economy. Commodities offer unique inflation protection characteristics. They have a direct price connection to inflation. Commodity prices are actually components of the inflation indices that measure price increases. When you hear about rising inflation, you're often hearing about rising commodity costs. Universal demand ensures continued value. Every economy needs energy, food, and materials for production and consumption. Supply limitations provide natural price support. Unlike currency, which governments can print, commodities have finite availability and face extraction and production constraints. Precious metals especially serve as stores of value with thousands of years of history. When paper currency loses purchasing power, investors have consistently turned to gold and silver as wealth preservation tools that maintain value across generations and economic systems. Investors have several methods to gain commodity exposure. Physical ownership means directly purchasing and storing metals or other resources. This provides the most direct exposure, but requires secure storage and may involve insurance costs. Commodity Exchange Traded Funds, or ETFs, track commodity prices without requiring physical storage. These funds invest in futures contracts or physical commodities, offering convenient access through regular brokerage accounts. Futures contracts are agreements to buy or sell commodities at predetermined prices on future dates. These are more complex instruments used by sophisticated investors and require understanding of contract mechanics and margin requirements. Finally, commodity stocks represent shares in mining companies, energy producers, or agriculture businesses. These provide indirect exposure. When commodity prices rise, these companies often see increased profits and stock appreciation. Despite their inflation protection benefits, real assets carry important risks. Volatility is significant. Short-term price fluctuations can be dramatic, especially in commodities markets driven by supply disruptions, weather events, or geopolitical tensions. Liquidity issues can arise because physical assets are harder to sell quickly than stocks or bonds. Real estate transactions take weeks or months, and selling physical commodities may require finding specialized buyers. High entry costs present barriers. Real estate requires substantial capital for down payments, closing costs, and reserves. Maintenance burden affects property owners who must handle ongoing expenses like repairs, property taxes, insurance, and management. Location dependency means real estate values vary dramatically based on geographic market conditions, local economic health, and regional supply-demand dynamics. Finally, market cycles affect all real assets. Commodities respond to supply-demand dynamics and economic cycles that can create multi-year periods of underperformance even during inflationary times. Let's review the essential points about real assets and inflation protection. Real assets provide tangible value that typically rises with inflation, offering a fundamental hedge against currency devaluation. Real estate offers dual protection through both property appreciation and rental income growth that adjusts with rising costs. Commodities directly reflect inflation as they are components of the price indices used to measure it, creating a natural correlation. Diversification across real asset types, combining real estate, precious metals, energy, and agricultural commodities, reduces concentration risk and provides more stable protection. Before investing, carefully consider entry costs, liquidity needs, and your investment time horizon, as real assets often require patient capital and longer holding periods. Finally, remember that real assets work best as part of a balanced inflation protection strategy, combined with other asset classes to create a resilient portfolio that can weather various economic conditions.
If you like this video, hit that like button and don't forget to subscribe. Visit codelucky.com for more such useful content.